Welcome to Invested Souls, the podcast where real estate expertise meets relationship growth.
And we're your hosts, the Flanagans. I'm Brad.
And I'm Jamie. This podcast is your chance to learn from our experiences and follow in our footsteps. Whether you're an entrepreneur, investor, or real estate professional, we've got the insights and strategies to help you elevate your wealth and achieve financial freedom.
But it's not just all about real estate. We believe that thriving in life means nurturing the relationships that matter most.
That's right. We'll be talking about how to balance your personal and professional life so you can create a fulfilling and prosperous future.
So join us on Invested Souls and let's grow together in wealth, relationships, and success.
Ready to elevate your life? Let's get started. Welcome to Invested Souls. Welcome back, everybody. We are on Invested Souls, and I'm Jamie Flanagan with Flipping Flanagans. And today on the show, I have Erin Tierney. I'm super excited to bring her on the show because she's actually in one of my favorite markets. So as you guys may or may not know, Brad and I resided in Colorado for about 18 months, and we were in Evergreen. And Erin's actually local to, she was in Idaho Springs. And you're versed in short-term rentals and you're licensed to sell real estate. So you're actually helping clients identify the right short-term rental opportunity. You know the ins and outs of all the short-term rental legislation, the changing things that are happening in Colorado all the time. So this is a great conversation. I'm super excited to have you. And I know a lot of our listeners are going to get a lot of value out of this. So welcome to the show, Erin.
Thank you. Thanks.
Anything you want to add to your bio that I introduced you on?
So I also have a 1.5-year-old baby girl. So I've been very familiar on how to renovate properties with a baby and how to navigate that. It's not fun.
I've been there. It's not fun.
Yeah. But
it is fun, but it's not fun.
Short-term rentals are more fun to talk about than renovating with babies.
Oh, it's so funny. That's funny you bring that up. We renovated this, actually, like every single person I know in Omaha knows about this property, but we renovated this house on Skyline Drive and we had like a hole in the floor for a while. And my son was like young. And I remember my mom coming over and she's like, that's not safe. I'm like, well, like he knows not to go down there. He never went near it. It was never even like an issue, but it was just funny. Cause I was like, God, I didn't even think about it. Like they just know to avoid, like we basically lived upstairs because our kitchen was torn apart. So I'm like, we don't really spend a whole lot of time on the main floor with the plywood showing. We're upstairs where we actually have carpet and TVs and can hang out.
I know. And I feel like the crawling stage was a lot worse because they're just like on the floor and they see every little screw and like.
Oh yeah. I can't imagine.
Yeah.
They want to know what everything is and they want to identify it with their mouths.
Yeah.
Don't do that. Oh my gosh. That's funny. Okay. So it's neat because we like have both like lived kind of nomadic lives for a little while. And so I would like, what would you tell somebody who's trying, they're like, I really want to get a vacation home, but I feel like it's not attainable, or I'm trying to make sure that I can at least break even on the payment. And some things I understand that you are very familiar with the tax benefits. And so let's just dig into that piece.
Yeah. Okay. Do you want me to talk about like the taxes first, or just like how much money you need to kind of get into short-term?
Yeah, both. I mean, you shared some of like your story. I loved what you shared kind of before the show started. So
yeah. Well, my husband and I, we've done the 5% down strategy. So we buy the properties as our primary address. So then we can get better financing terms. We can put 5% down instead of 20% down as an investment property, or 10% down if it's a second home or vacation home loan. So we've always just purchased the property as a primary, moved into it, renovated it because we buy fixer-upper properties, spend some time renovating it, and then once we set it up, get it ready to be a short-term rental, then we move out and then we leave all the furniture. So it's really easy to move. You just take your clothes and your things.
Awesome.
And like with being a real estate agent who specializes in short-term rentals, I know all the areas that are good. So in the Denver metro area, there's certain cities that are very friendly towards short-term rentals. So very familiar with what areas to buy in that area. And then also in the mountain regions, there's a lot of rules in different cities and counties. So I'm very familiar where to buy for that. But
how many MLSs are you a part of?
So our brokerage is a part of every major MLS. So I can have access to the other MLSs through our like
Ah,
managing
nice.
broker. So that's really nice. But yeah, I only have the RE Colorado, but through them I can get all the others.
Okay, because yeah, it was like when I was there, I could not believe how many, I'm just not used to that. Like we in Nebraska, like basically our big metro is all one MLS. And I was like, I got to get a different one for Brecken, for Summit County. First, I was like, I was up to like four that I was going to have based on, wasn't working with a lot of clients, but I did have enough clients. But it seemed like every time I would have somebody, it was like, oh, we want Breck. And then the next person wanted Steamboat. And then the next person wanted Boulder. I'm like, these are all different MLSs.
Yeah, and it's kind of frustrating because they're all just a little bit different too. So all the search terms or all the ways you can search are a little bit different for all the MLSs. There's some clients that I have that get auto searches for like Summit County, the Grand County, like Denver
Oh my
Metro.
gosh, yeah. And then if that agent puts them in multiple MLSs,
Yeah, yeah. And so like I have a listing in Winter Park right now. So I listed it under the RE Colorado Denver Metro MLS, and then I listed it through our managing broker Peter through his Grand County MLS. So it's like
nice.
double listed. But then it's really confusing because
It,
yeah.
it's awesome though, because I'm like, I used to see properties in Winter Park that would show up on both. And I'm like, that is super smart.
In terms of the tax benefits, I mean, you have short-term rentals, so are you familiar with the bonus depreciation and cost
Yeah, so
segregation?
we've actually never utilized cost segregation just because we had so many when we bought a couple apartment buildings and then we bought a package of houses. So just regular depreciation, we kind of were set with how much tax you can only get so much back, right? So
Mhm.
we never actually took advantage of bonus depreciation. However, I work with a lot of clients who that's why they buy. And the rule with being able to treat it as a hotel. So like the whole active income, like obviously talk to your CPA. Me and Erin are not CPAs, but talk to your CPA because the bonus depreciation is actually a huge factor for people who are like, I'm helping somebody right now and her husband works full time and she's stay at home mom, but this will become her income. Like this will be their new thing is it'll be their short-term rental and they'll be able to benefit from cost aggregating. So yeah, so you probably have some really good cost segregation appraisers in Colorado that you work with.
Yeah, yeah. So we have a good company that we normally recommend. I don't know if you want me to tell their
You can, you don't have to.
RCG valuation. I don't know if you've heard of them, but I use them personally for our cost segregation analysis on our Wheat Ridge short-term rental, and it saved my husband and I $37,000 in taxes. And this was when it was, I believe, 60% of the total. Now it's back to 100% you can take of the bonus depreciation. So it's just, I get a lot of clients who are maybe they are like W-2 tech employees
Mhm.
or engineers, like high income individuals, and they want to figure out how they can pay less in taxes. And so I help them strategize, purchase a short-term rental. And some people will buy a short-term rental every single year in order to
Yeah.
save taxes.
That's my new plan.
Yeah, and so like I'll just kind of explain it really briefly. There's whole webinars on this topic and it's pretty intricate, so talk to your CPA, but essentially if you buy a house and have it as a short-term rental rather than a long-term or mid-term rental, the average stays has to be 7 days or less for it to be counted as the short-term rental. And in the eyes of the IRS, it's known as an active investment rather than a passive investment. So you're able to take the bonus depreciation, or you're able to take the depreciation losses against your normal income and like normal income tax that you would have to pay. And a lot of times clients can pay no taxes depending on how much purchase price they buy. So like, for example, a $550,000 house for bonus depreciation at like a 24% tax bracket, just to keep things equal, you're saving like $33,000 in taxes at 100% bonus depreciation. So a lot of people, if they're paying taxes through their normal job, they get a check back for $33,000 when they file their taxes if they utilize this. So it's pretty cool.
It almost feels too good to be true, right? It's
Yeah. Like, how is this illegal or how is this
is
legal?
this legal? Yeah.
Illegal.
Have you ever read Tax-Free Wealth?
No, I
It's such
haven't.
if you like ever, if you're a reader, I listen to it every time I like drive across the country. I tend to put that on because it's like 8 hours, but it's every time I read it, I take something else from it or listen to it, I should say. I've never actually read it. I've only ever listened to it.
Okay,
But
cool.
he talks about why, like people, because there's so many people that are like, that doesn't seem like it should be allowed. But then he explains why it is allowed. Because when the government's trying to boost certain economical pieces, they're going to give you tax benefits. So like I think he talks about like investing in oil when there's all these different things. And that's the thing with real estate, is like really powerful stuff. And there's a reason that the IRS allows for these things, and it's totally legal and allowed. And as real estate agents, we don't get taught this in real estate school. Like we don't go to real estate school and they're like, hey, just so you know, here's how if you start selling real estate, you should really start buying real estate right away. They don't tell you that.
Mhm.
It's you find out on accident or when you start to invest, just because most of us do have a lot of people that I know in real estate want to invest, but they don't realize the actual tax benefits that come with it. And that's
Yeah.
where like what we're doing right now is we've got like, I don't even know how many doors, but all long-term rentals. And then we've got 6 midterm in Omaha. And then we've had like a handful of short-term, but we're selling all of our long-term. Like we're gonna move out of the long-term space. And Nebraska's taxes and insurance have kind of gone crazy. And so it's like, okay, now let's look at different markets. But we couldn't afford a 500, 600, $1 million property when we started investing. So it's like
Mhm.
Nebraska was the perfect, we could buy a house for 100,000 and it did appreciate. And so now houses were 200,000 and we're like, okay, we could sell 5 of these and buy something in the more stuff in the mountains. We
Yeah.
love our Winter Park house. Like it's our favorite property. Like we love it up there.
That's so
And they're
cool.
pretty lax, right? So like if you're talking about like what's your favorite market to sell a short term, if somebody were to call you today and be like, I'm never gonna actually visit this property, I just want a solid short-term rental investment, where would you send them?
Well, it also depends on their purchase price. So there's a lot.
That's true.
Because there's a lot of things that I need to find out from that person first. It's like, okay, how much are they? What is their max purchase price? What are their goals? Like, do they want to use it for family vacations if possible, or do they primarily just want cash flow? Or are they more interested in appreciation, like a market that is close to Breckenridge and will appreciate
Mhm.
faster than another market, but maybe have less cash flow? So there's a lot of different things that go into figuring out like what market is the best for someone. Also, like legislation wise, there's some markets that don't have any restrictions, and technically those are pretty risky because they can go in and change their legislation. So it's a lot less riskier to buy in a place that already has licenses that you have to request or like specific. But I'll just say like the county that I really like is Park County. So that's like one of my biggest areas that I recommend. And then also, I'm really
If
like,
you're listening, if anyone's listening to this, they're going to reach out to you.
True.
They like if you're listening, you need to reach out to Erin because she knows her stuff and she will help you. And that's the thing, the whole like buyer's agent rules too lately. Like you interview your agent and find somebody like Erin who's like super solid, who knows her stuff, who has connections, like just even the like cost segregation, like the amount of times I see, because I'm on the MLS email still, but the amount of times people ask for cost segregation, and it's interesting because it's like, well, obviously that person obviously doesn't work in short-term rentals a whole lot. And that it's not a bad thing. We all start somewhere. We all need contractors at one point, like that. I don't have contractors for everything, but it is nice to work with somebody who already has an established relationship, who you close on the property and you get plugged into somebody right away. You've even like the CPA relationships, all of that is really important.
Yeah, and that's like another thing that I help provide is I have contacts like cleaners, handymen, plumbers,
Yes.
electricians in every single market. And Our brokerage has sold homes in pretty much every corner of Colorado. So even if I don't have anyone offhand, we know a client that has a place near there that can recommend a cleaner or
Totally.
whoever you may need. But yeah, in terms of like a lot of people get like I don't want to make it seem like the cost segregation and bonus depreciation is that easy with short-term rentals. Like there's a couple of qualifying factors. For one, you have to track your hours on the property. So you have to have at least 100 hours on the and there's a couple ways to qualify, but like the easiest way my clients qualify is they have to have at least 100 hours into the property and then spend more time than anyone else. So that's like any cleaner. You can't really have a property manager because the IRS will
Mhm.
like kind of scrutinize that and be like, you have a property
Yeah.
manager, so you're probably not spending more time than anyone else on the property, like, and you only have to do it, like, you only have to self-manage the property in the year that you're trying to do the bonus depreciation and cost segregation analysis. So right now, if you find a property and close in a month, and then it takes, let's say you close in August, and then it takes 2 months to set up the property. So you're already in October at this point, and then you only have to manage the property for 2 months if you take advantage of this in 2025. And then after 2025, you can find a property manager. So some people like they automatically discount this strategy by saying, oh, I don't want to have to self-manage. I want a property manager. And it's really not that hard if they kind of,
No,
yeah. And yeah, I don't recommend though, like trying to launch it the last 2 weeks of December though, because then the IRS, you have to have at least 3 stays, and the average stays 7 days or less to qualify.
yes, that doesn't work.
Yeah, the IRS would be like, okay, well, you are only renting this for 2 weeks. So I don't know.
I
Yeah.
don't know about you, but I end up setting up a lot of our furniture myself, and I that takes some freaking time. So if you end
Yeah.
up going to the property and just waiting, because you got to wait for the Amazon deliveries and you have to wait for the pad, whatever you're ordering, but
Hmm.
that stuff takes time, and then putting the stuff together, I always do like I don't know, I'm big on Instagram or like not Instagram, I'm Facebook, so I'm always doing content. But I'm like always blown away because I'm like, okay, I started this project on Monday. I thought it'd be done by Wednesday. And now it's like calling my husband.
Yeah,
I'm like, I'm not done yet.
I know.
I still have more, or this was delayed.
It's so hard setting up a property, and I don't think people realize that too. They're like, "Oh, how hard is it building furniture?" But there's so much design that goes into it and making sure that the property is going to photograph
Oh my
well and
gosh.
that you have like all the plates and all the utensils, everything that you need. So we have a bunch of designer contacts that we recommend that people can use to help design their property. They help buy all the like materials, the silverware, the furniture, the plates, everything that you'll need for the property. And then my husband actually started a business doing furniture install for short-term rentals, helping
Oh my
people like
gosh.
launch or get everything
Freaking genius.
ready to launch. Yeah, and him and his business partner, they actually got a warehouse space so people can ship all of their stuff to that warehouse. And that's really nice because if someone's buying a mountain property, like they don't want packages sitting there for days if no one's going to be there. And sometimes like deliveries are really hard in the mountains, so that, you
I
know.
had couches that never showed up. It just like they were like, we don't know where like literally, I was like, I had put it on Airbnb before it was ready, which I'm like the queen of doing things. I'm like, it'll be, and I would just message people. The photos show it unfurnished. It'll be furnished by the time you get here. And here's a couple of our other properties so you can see how we do. It wasn't, And so people booked, and then I was like, we don't have couches. I was like driving a freaking U-Haul from, I'm pretty sure I drove it from either Omaha or Phoenix. I can't remember which one to
Oh
get
my God.
couches up there.
Yikes.
So,
Yeah.
and so I think I had to have them re-shipped to I don't even remember. It was a long time ago now, but there was a lot of the like contractors is very key. And the warehouse thing is key, is my point, because it was a debacle getting our winter park house set up. We bought a property in Granby in at Silver Creek.
Hmm.
And we are like, oh, just to see if we could manage from afar. we're like, okay, it's working. Like we had cleaners set up, everything was going well. And so then when the Winter Park house came up, we bought it. But then I was like, it was hard because it's like if delivery would say it was going to be there. And like I said, it never showed up, but I was there. Like I was expecting it to show up.
Yeah, it's
Uh,
the coordination for setting up a property is insane. And
yeah.
like, stuff will arrive damaged, and then you have to reach out and get
Mhm.
it replaced or returned. And we're launching our Westminster short-term rental right now, me and my husband, and there's still some items from Wayfair that like arrived damaged, and it's on my to-do list is to like reach out and like get a refund for those. And it's just like such a pain.
It is a pain.
Yeah.
Oh my gosh. So I'm excited to stay connected because, well, we're always looking in the mountains.
Yeah. And it's funny too, because so I hosted a webinar yesterday about analyzing deals. And so I had a performa and I went through like what you should look for in a mountain property and like what makes a good deal and kind of like what numbers to look for, how to estimate revenue and expenses, all that fun stuff. I had so many real estate agents attend my webinar and like ask for the performa, and they're like, I learned so much. And that just goes to show that like even if you're a real estate agent, there's a lot else that goes into
So
finding a
much.
profitable short-term rental and like even just knowing the regulations.
And I'm huge in referring what you aren't good at, right? So, like, even lately, I've evaluated my own business because, and it's like I've done luxury, I've done kind of the move up buyer, I've worked in new construction, I've kind of done it all in my career. But I love working with short-term buy. I don't like, I'm not very good at working with buyers. Like I know that, but working with short-term rental buyers, I love it in Phoenix because I'm like, I know I have people who come here, like I know how this is going to perform because I know where people are going. I'm familiar with what's happening. Like in Winter Park, I love that they do the Thursday night music. So every time somebody
Yeah.
books my Airbnb on Friday, I'm like, hey, if you have availability to come up on Thursday, I
Awesome.
love the music in the park. And those are the things like that really make a difference in the short term rental. But it's cool that you had a bunch of real estate agents on your webinar because like you're going to become that referral. Like I'm sure that's you already are. You probably already get a ton of referrals from other agents, but just like being the referral partner and knowing that my client is going to be taken care of better with you because I'm not in color. Like, yes,
Mhm.
I can help somebody like analyze a property, but for the actual like identifying the property, like I'm not there physically. And so it doesn't like I 100% and I encourage if you're listening to this as an agent to think about like where am I maybe where could I double down in my own business and what could I refer out to somebody who actually specializes in this because your business goes crazy. Like
Mm.
it's really cool when you start to dabble in the referral business, because then it's like, oh my gosh, your client was super happy. You end up getting another client because of it. And, the relationship just builds and snowballs. So,
Yeah, exactly. And I've even had real estate agents like personally use me to buy for themselves, and I'll just pay them a referral fee for
yeah,
themselves. And then they're like, I don't want to have to learn the regulation. I don't want to like,
I'll totally use you. We had an agent and we until because I have my license there, but like I said, I'm not like that's the thing, right? I listed when we weren't in Phoenix physically. I had one of my best friends list my property here because I knew I'm like she's gonna do a better. That makes more sense. I'm gonna come out ahead because me going back and forth on this specific property didn't make sense. Now
yeah.
I'm here physically, so of course I would list it, but it's just like I think that's pretty cool. I actually have a ton of agents that I'm totally going to connect you. I'm going to share this podcast with everybody. It's going to be great.
Yeah,
Colorado's a big market for us.
yeah. And I get some people looking in Arizona as well. So
Send them my way. I will take care of them. We live
yeah.
on the so we've owned property in Goodyear. I end up working with a lot of families who want to own property here. So like a lot of them don't necessarily go like Scottsdale. They want to go like out where it's like family oriented. There's things to do for the kids. There's hikes nearby. I always create like a private Facebook group for people. And that way I can I just go and I'm like, here's the park by at the house and here's the restaurants and here's the patio that I like recommend for kids or dogs, whatever. So it's kind of fun.
Yeah, that is fun. That's a good idea.
If you had advice for somebody or a book or something that like changed, like there was an aha moment in your life when you were like, this clicked for me at this moment because of this piece of advice or book or podcast, what would it be?
I'll just start out with saying I'm obsessed with the Bigger Pockets books. Like all of them are really great. But the Burr strategy book, I that was like a big moment for me because I came into real estate being a Dave Ramsey like
Ah,
connoisseur.
same. 15 years
Yeah.
ago.
Yeah, like this was like 2013. So like yeah, 12 years ago. I was like paying off
Oh
my
my gosh, this is awesome.
loans and like I was like, oh, like when I buy a house, like I'm gonna pay it off in 6 years and like no debt ever. And then I started listening to Bigger Pockets podcasts when I was doing my commute when I was living in South Carolina and realizing about like financial independence and like how real estate could really escalate like financial independence and how leveraging debt is
You
so
have to.
yeah, and like so that Bigger Pockets Burr strategy book really turned on a light bulb in my head of like, okay, how do I grow my portfolio as fast as possible? And they have an example in that book of someone buying a property like with as little as possible down and then like buying more rather than like saving up and doing the Dave Ramsey thing of
Hmm.
buying a property in all cash and then going that route. So I really like that one.
Especially now. Like
Yeah.
the prices now, it's not even like it's
Yeah.
insane to think about.
And I'm so glad that like my husband and I just jumped into things. You know, like we bought our first house, we had probably $10,000 total. And we just like had the mindset of we'll figure this out. And part of that was I was working for a power tool company. I had a lot of tools and I knew that I could just look on YouTube and figure out how to fix
That's
something or
awesome.
like DIY. Like I had the tools. But yeah, those Bigger Pockets books, I would say like any one of them are great. And like the podcast for Bigger Pockets just really helped
Love
me.
it.
Yeah.
Love that. Yeah. I'm gonna, I've never actually read the Burr book. So familiar, very familiar with the strategy. Just
Yeah.
I haven't read the book. We've talked about, I have another book I haven't read and I need to is Rich Dad Poor Dad. Have you ever read
Oh,
that?
yes. You haven't read that?
No, like we started investing in like, I'm like, I've read a ton of books, but I'm like, that is one of those books that comes up all the time and I've never actually read it. I know the concepts, like quadrants, like
Yeah.
I think I'm more of a Cliff Notes person. So like if I'm like, oh, what's this about? Google it and then I read a lot online, but I've never actually read that
Yeah,
book.
I was gonna mention that book when you asked, but everyone mentions that book, so I thought I should mention a different book. But yeah, for that book, it really blew my mind of how you shouldn't think of your primary residence as an asset because technically
I
you're
know.
paying money to live in it. That one, I think, made me rethink, okay, how do I limit the expense that I spend for my mortgage? How do I house hack or how do I like figure out how I can make this work?
Yeah.
My mortgage is less and I'm spending less.
That's
Yeah.
funny because my husband's obsessed. Every time we bought like a luxury home, he's like obsessed with, okay, what do we buy? Like the house in Evergreen, we paid 2,025,000. So our mortgage was like 7,500 a month. And after we ended up short-term renting it, so rent for like, I don't know, 2,500 bucks a weekend, I think it was. But we lived there. So we'd only rent it like 2 weekends a month and we'd go like camp and wreck. It was super. I was like, oh, it booked. Let's go. Like we would just pack up
Yeah.
the car and leave. In Colorado, you could do that. Like there's so much to do. Or Winter Park, we'd go wherever. But he's like obsessed. So if we own a property for like the 2 years, he calculates the mortgage payment and then, the insurance, everything that we had into it. And he's like, we actually lived for negative 24,000 on this one. So like he's like obsessed with calculating the payment and
Yeah.
making sure that we have enough equity to basically live for free. And so we're like, this is pretty cool. Now we've lived in Arizona, Colorado, a luxury home in Nebraska, now back in this one. But like that's what we look for is like the one that we bought in Arizona recently. There's one down the street that is listed for like 3 million. And we saw this one down, like we were just like dreaming. And so then we saw this one that was for sale in the corner down the street, and we pulled it up. It was like 1.7, but it didn't have a pool. So it didn't pop up in our search. And we're like, wait a minute. And we went and looked at it. We're like, actually, like it wouldn't be a $3 million property, but we probably get it to 2.5 with adding a pool, and pools here are really affordable. So I'm like, that's like our thing now. We're like, we have to make our primary residence not feel like it didn't cost us anything.
Yeah. So did you buy that one or no?
We bought it. We're here now. They're digging up the backyard.
That's awesome. I know. I love looking for stuff like that. Like if it doesn't have a garage and like
Yes.
maybe buyers are only looking for garages in that area. And it's like, well, if a garage costs $50,000 to add, like if you can get the house for 100K less, like
Totally.
it's totally worth it. Like I love thinking.
100%. Yeah. If you find those deals, call me.
Yeah. So what's your next deal that you're looking for?
So we would buy, so it's definitely another mountain house. We are looking at like Park City's on our list. I love Steamboat, but I know it's far. So that's like 3 hours from you, right? 3.5 hours.
Yeah. But
Steamboat, I would like if you found a deal in Steamboat, that's like where my heart is.
okay.
I like love it there.
What's your budget?
So it's like we have commercial financing. So if the numbers work, we can make the property work. So
Okay.
like we've looked at like even in Park City, we're looking at some stuff that's kind of on the higher end, but as long as it just depends on the numbers, because we can work it out with our portfolio usually.
Okay.
I mean, we can't buy like a $12 million property, but
Yeah.
I'd say like 1.5 to 2.5 is like realistic for us. But going into like if it was over and it actually the numbers worked, I've looked at like retreat center. Like I'm like, this would be a retreat, like do hikes. Cause we were on like, I think we were on 40, we were on a lot of acres. I can't remember. There was only 6 houses on our mountain. We were on Floyd Hill. But I think it's so cool. I'm like, I just want to have a place where like we can have couples come up and do like retreats. And I'm big in like recently, like really living in like my passion. And something I think is crazy is like marriage retreats are always like really draining. And I would love to have like a place where couples could come and it's not draining. It's like actually really exciting. And the guys can go do the mountain stuff and the women can do the spa stuff. So anyways,
I like that.
and those properties are really expensive. So I have that's
Yeah.
a good question. The budget is a good question.
It's funny that you mentioned that because that's like I think that's the opportunity for short-term rentals is like setting yourself apart from other people in terms of a bigger property that can maybe hold retreats or weddings if people do destination weddings. And one of my coworkers, another agent on the team, he purchased a property with a business partner in a town called Bailey. And it could sleep 14, but it didn't have the septic system that allowed it, as per Park County guidelines. So they put in a new $50,000 septic system so that they could sleep more and then sleep more than any of their other competition.
Oh, that's awesome.
Competition. And that's another thing where it's like, okay, what properties like maybe don't have the septic system for a bigger group that you could transform into something really special.
Yeah. Oh my gosh. Yeah. So keep an eye out. I love that. You and I think, I love that we think like that's our goal.
Yeah.
This is going to be a good one for people listening to. Now they all got to hear my buyer criteria too.
No, so like if other people find, what you're looking for, maybe you'll just get like a bunch of deals sent your way.
Right?
Yeah.
You got me. I know it. Okay. Oh my gosh. Okay. So thank you guys. Thank you so much for listening today. This is Erin. Reach out to her for all of your Colorado short-term rental and real estate needs. All of her information will be in the show notes, so you'll be able to connect with her on Facebook. Where do you hang out the most on social media?
Instagram. So at Erin Tierney Real Estate.
Perfect.
Yeah.
Okay. So that'll be tagged in the show notes. So thank you so much.
Yeah, thank you so much.
Thanks for tuning in to Invested Souls.
We hope you found our insights valuable and feel inspired to elevate your real estate and relationship goals.
If you enjoyed the episode, please subscribe, rate, and leave us a review. Your feedback means a lot to us.
Follow us on social media for more tips and updates, or visit bradandjamieflanagan.com. And to find out more about our Real Estate Wealth Accelerator, don't hesitate to reach out.
Until next time, keep investing in your future and nurturing your relationships.
Thanks for listening to Invested Souls.